have a very special panel with a series of tax experts here. We've got personal tax, corporate tax, indirect tax, and all the various taxes questions to ask. So let's go across first on personal tax, Mr. Divya Baveja. That's what interests most people. Now, we haven't seen changes like this since 2018. So for 4 years, this was perhaps the finance minister's last chance before an election. What's the big headline for you out here?
See, I think the big headline is that the government has been pushing for the new tax regime. When it was introduced, the idea was to make it simple, take away the deductions and just have a simple slabs. And so that was not seeing many takers on that. So I think that is one reason if you see all the changes that she has proposed are all towards the new tax regime, whether it is the standard deduction, which was not there earlier, whether it was in the context of the slabs which have got changed.
It's important to explain that to viewers. You're only getting these deductions which is announced if you migrate to the new tax regime.
Yes. In fact, also she's made a very specific point that now it is the default tax regime. So if I were to go and file a tax return today, it would take me to the old regime and I could opt for the new regime. So it is the other way around now. So the new regime becomes the default regime and then you can go and opt for the old regime. So that is the big difference, and I think when we look at the people who are earning above 5 crores, what she talked about, the rate going down from 42.73 to about 39%, that is again available in the new tax regime. So I think what a person needs to see is under the old regime where I get all the deductions, is that more favorable to me vis-a-vis the new tax regime which has the new tax slabs which are better compared to the old regime, and the surcharge and standard deduction. So one would really need to do a cost-benefit analysis and then take a call whether to go for new or the old one. Yeah.
You know, Mr. Malhotra, one of the key points over here is a big benefit is there for the middle class and those who earn up to 7 lakhs. Right? So there is no income tax. That's gone up from 5 to 7. We're talking only about the new tax regime. But by the face of it, this is a huge jump for those. You know, I mean, you don't have to pay taxes between 5 and 7 lakh rupees. This would benefit how many, you know, I mean, what sector? A large number, right?
See, it will benefit a very large number, but I think the earlier Revenue Secretary in the morning, I think on one of the channels, he was saying that, you know, there are 7.5 lakh taxpayers, individual taxpayers, and out of that 1 lakh really pay any taxes. So I think with this limit being enhanced from 5 to 7, I think we have to see what is the impact going to be on that
the overall number of taxpayers.
The 1 crore out of 7.5.
Right.
So now how much will be that 1 crore? Will it be 80 lakhs, 70 lakhs? So that's what's going to be seen. Whether this 2 lakh really makes a material difference.
Also, the highest surcharge has gone down from 37% to 25%. Yeah. So that's interesting, isn't it?
Yes. So again, that is under the new regime. So if someone was under the new regime and was paying almost 43% taxes, now you have a saving of about 4%. So you pay at about 39%. Yeah. So that's a big saving for people at that level. Yeah.
Ms. Roy, what about on indirect tax? What are the big gains that you see, or do you feel that more could have been done in that area? What do you feel about indirect tax?
So this was actually amongst the shortest speeches on indirect tax. So, but saying that there were some changes announced from customs. She spoke about, you know, priorities around green mobility, about enhancing domestic value addition, and she made certain announcements. So one was with respect to exemption of capital goods, customs duty exemption on capital goods used for manufacturing lithium-ion batteries for electric vehicles. So that was one. Then she spoke about a reduction in customs duties for import of camera cells for mobile handsets. So there is an aim, there's a clear aim of the government to enhance India as a hub for manufacturing of mobile handsets. We're already the second largest manufacturer of mobile handsets, and I think they want to enhance exports as well as domestic manufacture of
and cigarettes we've seen.
Yes, cigarettes.
ITC shares are defying the stock markets right now.
Yes,
but cigarettes, there's so clear the message there on health as well.
Yes, you're right.
It's
because
sin tax.
Correct. So this is a national calamity contingent duty, which is also collected on cigarettes. This hadn't been tinkered with for the last 3 years. Usually it happens on a year-on-year basis for cigarettes, but it hasn't. But this year's budget has seen an increase there. So yeah, so these are the
we've got some wonderful guests joining us at this stage. Sumant Sinha, the chairperson and CEO of Renew, joins us. We're also joined by Sangeeta Reddy, the Joint Managing Director of Apollo Hospitals. Thank you both very much for being with us. Let me go across to Suman Sinha first. The outlay, Mr. Sinha, as far as green energy is concerned, is absolutely huge. It's perhaps a record for any country which is a developing economy. So in context, what does this mean for us?
Well, it means, I think, Vishnu, very clearly that the government is taking its obligations on converting India into a green economy very, very seriously. And it's not just doing so in the area of the energy transition, which of course has always been a focus of this government.
Yeah.
They've allocated, for example, 35,000 crores through MOPNG for energy transition, which is clearly meant to look at some of the fossil fuel sectors and see how we can transition those into cleaner areas. And then I think there is, of course, a couple of things that have come in for the clean energy side, which is really the 4,000 megawatt hours of battery viability gap funding, and then also the issue of the Ladakh transmission line, which I think is very interesting because that will lead to the further development of Ladakh, given the fairly good wind and solar resource in that area. But then beyond that, I think the government has really spent a lot of focus and attention on figuring out how to really take the Prime Minister's philosophy of life into a number of different areas and really look at the economy from a circularity standpoint. It includes things like scrapping old vehicles. It includes things like waste to energy plants, also giving credit to various corporates to go green, looking at mangrove plantations and so on. So quite a lot of different things have been thought through in this budget, and a lot of encouragement given not just to the most obvious elements of the clean energy area, but I think trying to really broad base into much more different areas, including by the natural farming as a way to cut down fertilizer subsidy and so on.
Hydrogen mission, an outlay of 19,700 crores. We've spoken about this in the past. The aim is to reach 5 MMT by 2030. That is very much the future, or one of the key steps towards achieving, energy independence. So, do you welcome that step, green hydrogen?
No, of course, Vishnu, and we of course do. I think that the targets that the government has set are very ambitious. 5 million tons of green hydrogen by 2030 would require almost 125,000 megawatts of renewable energy capacity to be set up. Almost a total investment of a couple of $100 billion will have to be made in that. So it's a big target, and it's meant for two things. Number one is to make India energy independent as much as possible, to set the base for that, and also to convert India into a manufacturing destination to export green hydrogen to other countries as well.
Right.
So I think that is really quite a significant step forward. Of course, 19,500 crores, some would argue, given the nature and the ambition of the program, is perhaps a low number, especially given what some of the other countries are doing in the same area. Sure. So I think that's something I'm sure the government might look at in the future as we go forward.
I think that's an interesting point, Mr. Sinha. And if I can bring in Sangeeta Reddy on a vision of the government, and you may agree or disagree, but how a vision of the government has been incorporated in these budgets outlays. So you're seeing a big focus on growth expansion. You're seeing fiscal discipline and consolidation coming up as major points. Ms. Sangeeta Reddy, of course, you earlier represented FICCI and also as Apollo Hospitals. Do you think this focus on growth, on fiscal consolidation and discipline is key with India's aim to getting to a $5 trillion economy?
So absolutely, I think it's significant. It is movement in the continued and stated direction of growth for the country with ease of doing business as well, and a good infrastructure and a governance which attracts foreign investment, which brings in other players, which stimulates startups. So this is clearly a growth-oriented budget. In addition, I want to kind of say that the angle which I'm seeing in this budget is also in the year of G20. I think there's a very interesting global outlook strategy. So you are seeing a focus on environment, and you remember the COP obligation that we had, that we would have 50% green energy. So this is movement in that same directions of commitments made to the world. I see the mentions on women and special focus on that. So it's equity, it's environment, and it's growth. So I believe those are a combination, while there's an underlying strategy of infrastructure, which is, one of the triggers for growth or one of the important levers for growth. In addition to that, I think the tax regime and the continued rationalization of tax regime, making it more friendly, more money in the hands
and
of
in
some.
fact,
I mean,
no. So I think
was thinking of our nurses.
So for the middle class and for growth, big messages. But for someone from your sector, because education and health, now that's something that everybody argues that education and health is something which is never given the share of the GDP that it should get. Do you feel that health, in a sense, that sector has been left behind, especially given the 2 years of the pandemic that we've seen?
So I would have wished for more statements specifically on healthcare,
right.
But I'm waiting to see the fine lines, because if you have a good infrastructure allocation, much of that can move into health infrastructure.
Ma'am, what the government...
nursing colleges, sorry,
yeah.
Yes, Vishnu?
No, 157 new nursing colleges
yes.
co-located with 157 medical colleges. That, to me, as I remember, that's the only announcement in healthcare. Would you have expected more?
That and the research, I would have expected more, but that
right.
one and the research point.
Yeah.
So I believe that we should go as a healthcare sector, look at the infrastructure and look for more allocations there. Look at the tourism, because medical value travel is definitely getting a big push from the government. So I'm hoping that the tourism will have allocations for medical tourism. And interestingly and importantly, that the research which is starting off small, that we can highlight more on research, because the future for healthcare is really about new methodologies. The offshoot on the AI and those focus will also have a health specification.
Impact.
So we have to work with the budget, and if we're putting more money in the hands of the consumer, we know that this is predominantly a self-pay market in India.
No, and I think
so
the finance minister really taking advantage of the economy's resilience currently at a time when we are the fastest growing economy amongst all major economies. But I'd like to bring in Mr. Sidhwa here to talk really about direct tax. So when we're looking at the headlines, it's also about tax collection and the government wanting to expand the tax base. They need to fund their welfare schemes. They're looking for more expansion for infrastructure investment also. How do you think these changes will it increase a tax base? What do you think would be the biggest impact of these, besides, of course, putting more money into the pocket of a consumer?
So, I think the finance minister started off by saying that we have done a lot in terms of bringing compliance in a good place, in the sense she talked about how many returns actually got processed electronically, how many days refunds took to get issued, and the number of days coming down going forward. She also laid down the path of something which is called the consolidated return form. So that means one return form, a common return form for all types of assessees. And this is based on a philosophy of having a smart questionnaire. So the return actually starts off with a series of smart questions, which when answered point a taxpayer to the correct return form.
The Saral form plus, right?
Exactly. So today, you actually have to read through all the forms, what each form you're actually supposed to fill. This will actually take you through a process of, through some smart questions, get you to the right form. So I think that's a very good step. It's going to help us. The other two things that I felt done, which is really very good, is opening up and freeing up the appeal process.
Yes, I know.
Now, one of the things that has been announced is this creation of 100 posts of what she calls as Joint Commissioner of Appeals. And essentially, they will take over the pendency of low-level appeals. We need to look at the fine print to actually see what is the criteria and cutoff between a Commissioner Appeals and a Joint Commissioner Appeals. But essentially, today what's happened is because of the pendency through COVID and the fact that the faceless appeal system has really not completely kicked off, there's a huge pendency at that second level of appeal, just after you complete a assessment, just after, and that's revenue locked up for the department, as well as unnecessary hassles for taxpayers. So unlocking that seems to be a very, very smart move.
Let's just see if we can go across to Nidhi at if we can, okay, let's go across to Mr. Chatterjee, joining us now, the Managing Director of the Lakshmi Group. Mr. Chatterjee, for you, what are the big headlines out of this budget? Are you happy with the whole infrastructure expansion, the growth focus that this budget is giving?
Absolutely. I think given that this is a last budget of this term of the government, it is a bold, development-oriented budget. In terms of reducing taxes, I think that will also be increase expenditure, especially in the middle class. The focus of green and organic is very good for the plantation sector, agriculture sector. And I think the focus on capital formation, the fact that the government has increased capital formation and over the last 3 or 4 years it's kept increasing capital formation and building a digital stack for governance. All of this should ease doing business, especially in areas such as the Northeast where it is difficult to, the cost of doing business is high.
Right.
So I'm very pleased with the budget.
All right. Well, let's just go straight across to my colleague Nidhi Razdan at the Confederation of Indian Industry. The markets have given a resounding thumbs up, more than 1,000 points up. Nidhi, what are some of the other reactions that you're getting?
More people will come, yeah. Yes. Easily, yeah.
All right, we'll come back to Nidhi. Okay,
welcome
go ahead,
to
Nidhi.
everyone from the CII NDTV special here in Delhi. We're getting first reactions from members of Indian industry. Please let me welcome Mr. D.K. Sen from Larsen and Toubro, also Vipin Sondi, who works with CII on future mobility, on innovation, technology. So let me first ask both of you, the overall question, Mr. Sondi, to you first. Very simply, what were your big takeaways overall from the budget?
Thank you, Nidhi. I think, one, it was a shorter speech than before and therefore very effective. But I think the impetus on growth, on jobs, on women, on youth, but technology-driven, which is where, we have a lot of focus, was tremendous. The second was, I think, keeping fiscal prudence, which means a target of 5.9% down from 6.4% and perhaps 4.5% by FY 25-26. And finally, a massive capex 33% rise over last year, which I believe is third in succession, which is a great multiplier for all of these. And that puts income into people's pockets. And the only thing I hope is 50% of this capex is spent in rural India, where you can have then jobs as well as all other benefits.
Mr. Sen, if I could get your first thoughts, and something I was asking an earlier panelist as well, in terms of the government's own record of this spending, which, last year it was at 7.5 lakh crores, this time it's 10 lakh crores. In terms of implementation, are you satisfied that it's being utilized properly?
I'm very happy about the way the budget has gone. I think she has done a fantastic job. She addressed the right areas where to be spent. Increasing it from 7.5 lakh crore to 10 lakh crore is very great. In fact, I was anticipating that this will come. At this point of time, I told you that 47% is yet to be allocated, the capex expenditure. I think large part will be addressed. More importantly, she has addressed the other part, which is state capex. She has given incentives to the states to increase their capital expenditure, which was so far about 4 lakh crore per year. I think it will go up substantially now. Apart from this, she has addressed the more important areas like MSMEs and all that. They really had been having badly hit. She increased the areas where to incentivize them. Further, for the dispute resolution, a lot of arbitration cases are stuck up in finally deciding. So that she has done, she has promised the entire fraternity in a graded way. She's going to address all the arbitration cases where the award is received by this. So this is very good for us, and we're looking forward to it because this will release a lot of capex to the infrastructure industry again, which will be much good for the country.
So in terms of job generation, I mean, just to explain it very simply to our viewers, more money in infrastructure, more investment, it means more jobs. Does it mean better quality jobs as well?
Well, I have to say here that the capex expenditure is increased, but they must allocate to the right kind of people. So in this case, we have something called QCBS system of award. That means quality and cost based. The award and circular has come out last year. It's not being implemented properly. So government must implement it in the right spirit. So right now, the limit of the level of jobs where QCBS will be applied is much lower. They must increase it, and all infra projects must come under the QCBS award, where they will be going to the right people, and there can be gradation of contractor who can address this.
Right. Mr. Sondi, just on the tech innovation front, since that's your area of expertise, what have you sort of taken away from this budget as being the big positive?
Before that, and I will come to that, on your question of jobs, as far as infra is concerned. I think, how do you raise the productivity of a country as a whole? If we can get to point A by point B faster, if we can transport our goods faster, you automatically enhance the entire productivity. For that, if you use technology, the quality of jobs keep going up. But my 5 takeaways on the technology front, and there are many. Number one, I think there is a great amount of focus on coordination between academics as well as industry. Now, we have something in technology called the proverbial valley of death, technological valley of death. Between a good idea in academics and taking it to the market, it falls through. So number one, I think collaboration between public and private research institutions in areas like 5G, pharma, AI. This will be meaningful research, meaningful innovation. 2, focus on emerging and critical areas like IoT, green tech, circular economy. There was a lot of focus on green and circular. Millets as well. 3, focus on skill development. This is where your question comes in. On AI, mechatronics, robotics, etc., 3D printing. Now for that, we are creating, or the government is creating skill centers, and that's positive as well. And 4th, encouragement of on-the-job training and industry-relevant training in academia. We need to have curricula which is focused on what will create meaningful jobs for young people. And finally, what I really liked, a unity mall in states for the promotion of one district, one product for our traditional arts and crafts and enabling them to go to market. We've seen indigo dying in Rajasthan actually slipping away. This will bring forward our traditional arts and crafts.
You've actually really summarized that well. I don't know, maybe you should look at a career in writing as well, because it summarizes it so well. Mr. Bhutani is with us, and he's been taking us through, especially the tax structure and what this new tax structure is going to mean. We've talked a lot about the slabs and the change in that. But we also have an old tax regime, and we have this new tax regime, which the government seems to be encouraging now. Do you think there is an incentive for people to move to the new regime? Because it doesn't, include things like, your house rent exemption, etc., etc. So that's been something that still kept people with the old one.
Correct.
But what would you advise people to do?
Well, the underlying philosophy of giving an option to the taxpayer is to not take away what you have given up, but disincentivize them by saying that if you don't move to the new regime, then you will be taxed at a higher rate. So it's like a menu option that has been given to employed as well as self-employed. You pick and choose. I think either of the measures would not have been very popular if the government would have said that in our pursuit to simplify the tax system, not give away all these exemptions like housing and others you spoke about, then in that case taxpayers are not going to be happy. So it's a menu. But I think that from a medium to long-term standpoint, and if you look at the larger vision of a new direct tax code, all these exemptions could become history. The government may want to move to a more simplified rate structure. As you saw, the new rate structure is talking about someone with an income of 9 lakhs paying 45,000 rupees. So that's the simplification part. Now the figures that she read out, 9 lakh, 15 lakhs, and what is the savings of 20%, 25% are on an assumption that you're not claiming an exemption. So that seems to be the future direction. I just wanted to come on one more thing. Vipin spoke about the fiscal deficit. Yesterday in the economic survey, the chief economic advisor was a bit hesitant to give away whether he'll be able to meet the 4.5% fiscal deficit target in financial year 25-26. I think she seemed more confident today. But please bear in mind, it's predicated on tax collection. She's been able to meet the 4.6% fiscal deficit target this year only because of robust tax collection. Though the GST collections do not form part of the budget exercise, her corporate tax collections have been good. So bear in mind, she's making a very important assumption that for 2 fiscal years, this tax collection buoyancy that has been achieved both for GST and direct tax collection is going to continue for the next 2 years.
But does this budget do anything for, for example, exports, which have been on the decline, which has been a worry? And given the concerns about inflation, the depreciating rupee, where does this budget place us?
We will need to look at the fine print if there is anything for exporters, but I did hear her mention that her thrust on manufacturing is to encourage exports. So that's one statement that came out very positively. She also spoke about changes in the inverted duty structure. She mentioned about the toy industry and other aspects in order to encourage manufacturing. So there are two elements to it. One is how do you encourage manufacturing, and second is how do you make your manufacturing export competitive. I think that is really the big elephant in the room, because competitiveness of exports has been a challenge for Indian exporters, whether you look at textiles or you look at any other industry which are very export intensive. And an area where we have done very well is on the services side. But manufacturing, outside of specified manufacturing, we do have a challenge on making our exports competitive.
Nakwa, did you have a question?
Would you say it's a balance between welfare and vikas? दोनों को उन्होंने balance करके रखा निर्मला सीतारमन ने. Welfare पे भी focus है, विकास पर भी focus है.
Yes, it's a very good motherhood statement to make, and hence the overall theme of the budget is there is something for everyone in the budget.
And what I liked was that she started with the statement that this is the first year of the Amrit Kal, you know. That means this is the juggernaut which the government has started rolling is going to continue for a long time. And this is a good progress towards that. She made almost every sector very happy, reasonably happy. And particularly for women, for personal tax, every area she's touched upon. I think this is going to be taken very positively by the people of India. And further we expect some more things to be refined.
Such as?
Like say, you know, this manufacturing sector, I have spoken earlier also about everything to be done to make sure that things are manufactured more in India than imported. Everything. And in fact, there are some global tenders where international companies come and bid for it. If there is a deemed export benefit there, they get the deemed export benefit because they don't pay any taxes, whereas we don't have the benefit. So we pay more money. So Indian contractor becomes more costly than the international contractor.
We're going to just take a moment to pause on that and come back and talk about that in some detail. But for now, I'm just handing it back to Sonia and Vishnu at the studio with more reactions to this Big Bang budget.
Right, and of course, Nidhi, now it's time to take a deep dive into those numbers. What are the big indicators that have come out? Of course, the big headline is that capex investment that we are getting. We've seen the allocation now raised by 33% to 10 lakh crores. So, Priyanshi, what are the big numbers of the 2023 budget?
Well, Sonia, in fact, that was one of the highlights out of the budget, that the capital expenditure has been increased by 33% to 10 lakh crore in the previous financial year, which is the current financial year. So in the previous budget, it was 7.5 lakh crore. Now it has been increased to 10 lakh crore. So the government definitely focusing on capital investments, and that's what the economic survey had also focused on. Now let's take you through the other big numbers from the budget 2023-24. The nominal GDP growth for the financial year 2024 is expected to be at 10.5%. Remember, this is the nominal GDP growth, which takes into account the price changes and inflation as well. The real GDP growth, as expected by the economic survey, is going to be around 6.5% according to the economic survey. But this above 10% figure is taking into account inflation as well. Now, the gross revenue in financial year 2024 will be 10.44%. The GST target for 2023-24 is up 11.95% to 9.6 lakh crores. Remember, GST collections have been increasing for the last few months. Just in the month of January, we recorded the second highest ever GST collections, and the GST collection target for the current financial year has been increased, for the upcoming financial year has been increased by over 11%. Now let's come to the fiscal deficit, which of course is a very important indicator for the overall health of the economy, because fiscal deficit is essentially the difference between the expenditure and the receipts of the budget. So as much fiscal deficit is essentially the difference between what the government is spending minus what the government is receiving. So it's essentially an indicator of how much the government will have to borrow to fund their expenditure. For the financial year 2024, it has been pegged at 5.9%. For the current financial year 2023, the previous budget put it at 6.4%, and that target has been met as announced by the finance minister. So next year, the fiscal deficit target has been reduced by 5.9% 4.9%, and the finance minister even said that the aim is to reduce it to 4.5% by financial year 2026. We'll have to see when that happens. Now, 10 lakh rupees gross market borrowings in financial year 2024, which is at 15.43 lakh crore, the disinvestment target as well for financial year 2023-24. There's also 51,000 crore rupees total subsidy for the year that has been announced, and 3.74 lakh crore food subsidy that has been announced, and it was previously 1.9 lakh crore. Now the allocation for Mahatma Gandhi National Rural Employment Generation Act, that has been at 60,000 crores. So these are the major numbers that have come up from the budget, as many people were pointing out that the budget seems to have a mix of benefits for personal tax and also benefits for capital expenditure, for Manrega. So these are the major announcements that have been made in the budget by the finance minister.
Priyanshi, and interesting, of course, also that still that Manrega allocation is still is now at 60,000 crores. So Manrega welfare schemes also very much the centerpiece, even as the focus is on growth and capex outlay.
I think one of the key points which we were talking about is linking data. DigiLocker, which I use, which I think is brilliant, absolutely. Aadhaar and PAN. What is it the government is trying to achieve? Because until you told me, I didn't know. I thought your final financial document is PAN. It's not.
So, I mean, there are a number of identifiers that are used across. So, you have your Aadhaar number, you have your PAN number, you have your voter ID number, you have, I mean, the pension, if you're part of the national pension scheme, you have a PRAN number. All those are identifiers. And the idea is that if you want to triangulate data, or I assuming this is the ultimate objective of the government, is to detect data as to people who may have income and who are not possibly filing a tax return. The idea of triangulating all these sources of data is perhaps the objective of this exercise. So as you start triangulating, you need one single ID to be the triangulation point, and that is possibly the aim of this exercise. We heard the finance minister talking about the increase in the digital payments that are being made in the...
Yes.
So digital payments are being made, but are they able to actually detect non-filing or people who are having income and who are not declaring their income fully through those digital payments?
So with PAN becoming the main identifier, is that easier for people? We've also seen that KYC, that they've said that those it will be made a much easier process. Do you think that will help?
I'm sure there are complex algorithms that we don't see at this point of time, but I'm sure that the tax department, both in the GST as well as in direct taxes, are attempting to do to try and triangulate this data and make sense of it all. And perhaps making PAN the primary document is the motive for this.
Mr. Bivecha, what about for senior citizens? Because we've seen also that savings which they can now put, which is under the senior citizen savings scheme, has doubled. What's the big message for senior citizens in this budget?
I think the two messages. One is definitely, in terms of higher rebate that they can get, and also the idea is that it makes it simpler for them in terms of if you have a higher rebate or you don't have to pay those taxes, so it makes the life simple for them. So I think these are the messages I would say. Yeah.
Just to come back to the entire digital point, I was actually taking down a few notes over here. Digital payment showed an increase of 76%. That's whopping in transactions in 2022. They've an outlay of 7,000 crores for e-courts. That simplifies matters. So again, this entire processing through a digital network, 100 labs for developing applications to use 5G services. So this, the backbone, already increasingly the backbone, they're trying to strengthen that, right? Any one of you?
Yes, so government is actually looking at strengthening their whole application process, which is the backbone of processing your tax returns, doing the assessments, processing the refunds. So that whole process is one of the focus areas of the government, and they have been really at it, and they are looking at how do I really improve my systems and make it more robust. Right. So that is the process which the government has actually been working on also with authorities. Yeah.
And even if you see the GST end, which is the backbone for GST compliances, it's fairly complex. And at times you find that the government may actually be ahead of taxpayers, on their IT system. So I do believe that, they are focusing, the government does have IT infrastructure, and the fact, like we spoke about, triangulation of return filings, so that the the data is all available with the government, and they're able to conduct assessments and detect any evasion.
We're just getting some voices in also from the Confederation of Indian Industry. So let's go back across to Nidhi. Nidhi, what are the latest reactions you've got coming in?
Right. Well, welcome back to the CII headquarters here in Delhi as we talk to leading names from Indian industry reacting to this big bang budget. Happy to welcome Suchitra Ella of Bharat Biotech first on the panel today. First, your overall reactions to the budget, which seem to be largely positive, but particularly for the health sector, which obviously is what you'd be interested in and what we'd like to know.
Hi, Nidhi. This has been a positive and forward-looking budget on the overall space. If we look at it, an impetus that is required for all of us in order to bounce back and move the economy forward in the years to come, and also with the longer vision that we have as a country for India at 100. It looks very balanced. It looks upward to me. And there's been a lot of, there's almost been a good balance in terms of all sectoral areas and focuses and interventions that need to come in at this point of time. Coming particularly to the health segment and to the pharmaceutical and to the life sciences industry, the impetus and the thrust that is going to come about in terms of the centers for excellence that are being initiated for higher innovation and higher R&D collaborations, which would be very important for the life sciences industry as a whole, because we are moving towards product development and clinical research, and of course international quality norms and standards that that kind of like broadly cover all our products when they get into the global market. So that is an important step going forward for the sector as such.
So you're saying in terms of research and development?
Right, because we...
And do you think the pandemic kind of spurred that on?
Research has been happening in pockets. It's mostly contained to the labs, to the national laboratories that are already there, established very many years ago and decades ago. But then applicational research is what we need to be focusing on in order to build products from India. Because generics are there, but then generics are not the high value products that we normally look into. They can give you short generation of revenues, but in the short term, but the actual high value comes from original molecules and original research.
Okay, so very positive, as you say, overall, and for healthcare as well. Let me welcome Janmeja Sinha, the chairman of BCG India as well. Thank you, Mr. Sinha, for being with us. Are you also giving it 11 out of 10?
Look, I just want to put it in context. We are in B20 this year. The world is looking at India. If you look at the Economist and all, they were all saying India is the story. And in a time of such uncertainty, where we needed to manage the prudence around the budget to get to 6.4 and talk about the future strategy with the budget, and yet not cut back on the investments in infrastructure, soft and hard, and to actually start taking the transition to green very seriously, has been a budget which is very predictable in terms of its continuation over the last 4 years, and good for business. Whenever there is business predictability, business likes it. And the domestic consumption will also increase with the cuts in taxes for the middle class, which will, when you look at two-wheeler sales and all falling, that will get a fillip straight away and immediately. So I think it's a very, very prudent, safe and solid budget, which is one which... I don't like the tamasha budgets, which have all these big announcements. I like budgets which are sustained and continue over a period of time.
Someone called it a quiet budget, but a good,
important,
quiet budget.
Powerful, solid budget, but not one full of tamasha, other than the fact that millets got a lot of time in the budget.
You don't seem to be too thrilled to hear that. But Mr. Bajaj, what did you think? And, given as Mr. Sinha was mentioning, these uncertain times we live in globally. How does this budget place us, and does it place us on that road to 6.57% economic growth, or do we still need to kind of watch how that goes over the next few months?
I agree overall with what Janmay said, and I would just add one more word, saying that it was a very balanced budget. So it balanced growth with fiscal prudence, and that is something that we were hoping to see. The significant investment in infrastructure, so the public capex spend, the 33% increase is welcome, should be a big boost to economic growth. But look at it along with that, the additional support, one more year to states for improving urban infrastructure, creating the right environment for municipal bonds, so that this is not just a one-year exercise. This is something that is then ongoing towards your query that the 6.5%, 7% growth, will we see it coming on? Very much this should support that. As we are starting to see growth coming, it's not that growth comes only to large companies. It comes to companies of all sizes, and the additional 2 lakh crore credit guarantee scheme to MSMEs, again, very welcome. So they've thought through various aspects of what needed to be done. Another ask of CII was to help those at the lower income segment and the rationalizing of income tax over there. Again, yes, again a welcome move. And finally, I would say to encourage manufacturing in India, a number of initiatives have been suggested, just correcting the inverse customs duty structure where relevant, cutting customs duty where relevant on parts, on raw materials, on inputs. All of these go towards creating a robust foundation for growth, not only for the coming year, but for coming years ahead.
Right. Mr. Rakesh Mittal is also with us from Bharti Enterprises. Mr. Mittal, your thoughts?
Well, I would say, first of all, this budget is in continuity on growth orientation as well as on the inclusive agenda of the government. That is something which I believe is the fabric which continues, and we've seen this in the past year budgets as well. And I think more importantly, containing the fiscal budget within fiscal deficit within 6.4% in spite of all the pressures the government had. Is a clear sign that the roadmap to 5.9% next year and 4.5% by 2025 is something which is doable, and I see that will happen. I would have never seen a very high focus on the manufacturing side, which in the last few couple of years we've seen, including the PLI schemes. We've seen 150 plus manufacturing units on mobile phones, and with the custom duty exemption or concessions which have been granted, that will bring down the prices of mobile devices. But I think more importantly, I would say 2 or 3 big areas of focus which I saw. One was setting up 100 labs, 5G labs in engineering colleges across India. To develop solutions on smart classrooms, on precision farming, on healthcare. So I think these are the areas where 5G will be the rock bed or very strong foundation to carry on all these initiatives into the rural hinterland of the country. So unconnected will become connected with a high rollout of 5G and availability in the next year and a half.
So in other words, a very technology-driven,
that is right. That is right.
Push, yeah.
The second, I would say, on the tourism, that was a big focus which the finance minister talked about, and more importantly, in public-private partnership and a mission mode. I think anything which Prime Minister Modi has launched in a mission mode has had great success, and we've seen huge positives coming out of there. A DBT scheme to scale 47 lakh youth on tourism. I think these are the things which will not only generate employment, but also bring in tourists not only from international overseas countries into India, but more domestic tourism as well. If we see the last couple of years, a lot of amount have been spent on infrastructure. We also saw 10 lakh crore being provided on the infrastructure for the next year. I mean, all this will lead into religious tourism, medical tourism, which are huge opportunities for India. On the farming side, agriculture, I think clearly I am seeing a crop diversification program focus by the government. We heard her talk about millets. We heard also moving 1 crore farmers into natural farming. I think all these things are to ensure that the yield per hectare productivity goes up, farmers' income move up, and more importantly, can we look at technological interventions in the farming sector? I would say all in all, This is something which are huge positives. Launch of aspirational 500 blocks will ensure that there will be a lot of investment going in.
An interesting update actually is, and I think that's being reflected on our screens as well, that the markets were cheering the budget a little while earlier, but they seem to have not be cheering as much as they were a little while ago, Mr. Bajaj. I mean, this volatility on the markets, it's not that it's unusual. One has seen that after budget speeches earlier also. But is that because people are reading the fine print and perhaps things are popping up that the markets might not be so thrilled about?
Well, I've not had a chance to take a look at the fine print.
They were about 1,000 points up. Now they're only about 400 points up compared to what they were an hour ago.
So as we see the fine print, we'll react if there is something to be reacted to. But I think overall the measures that have been announced today are very positive. The God is obviously in the execution, and so we have to see that they get executed well. And if there are some issues in the fine print, that is something then that we will take up as appropriate also.
Right. Mr. Sinha, your thoughts on this market volatility, is it a big deal?
You know, I really feel that on the day of the budget, even the markets don't know whether to be volatile or not. So they just keep moving up and down to keep everyone attentive. But I really feel that, you know, the long-term plumbing that is being put in place will help the foundations of the economy. You know, there are 2 or 3 subtle points which were made, which are really important, which haven't got highlighted as much. You know, India will become data rich before it becomes rich. And the government is trying to empower people to use their own data. Now, even the fact that you'll have a repository for information which you can share with different government agencies makes life a lot easier, and you hold that data. The other thing is that she said that regulators, financial services regulators, who have for a long time had a free run, will have to look at their regulations and take public input. That's a really big deal because, you know, the regulations have not been consistent, have been different across different regulators. And they have not really been answerable. And now they're being made to answer, which is a great thing. And then again, the transition to green. So I think long-term trends that are being picked up are really solid. And, you know, I would not look too much on the movements of the needle.
Well, we said they were cheering and then, you know, now they're cheering, but maybe not as much as they were earlier. I have to, take a break at this point. I'd like to thank you all very much for joining us with your initial thoughts on the budget. As we said, we are also looking at the fine print. There seems to be a market-linked debentures tax as well. Insurance payouts above 5 lakhs are going to be taxed. So that's interesting, and that might, worry some people. But I'll just hand it back to the studio for the moment. Vishnu?
Thanks so much, Nidhi. And of course, there's some fine print coming out now on taxes. We're just going to discuss that. But first, let's not forget what this is about. This is the Finance Minister's 5th budget, the Modi government's last budget before elections next year in 2024 and key state elections coming up. So let's just look at the highlights of what some are calling Finance Minister Nirmala Sitharaman's dream budget.
Personal income tax. I have 5 major announcements to make in this regard. These primarily benefit a hard-working middle class. The first one concerns rebate. Currently, those with income up to 5 lakh do not pay any income tax in both old and new regimes. I propose to increase the rebate limit to 7 lakh in the new tax regime. Thus, persons in the new tax regime with income up to 7 lakhs will not have to pay any tax at all. I had introduced in the year 2020 the new personal income tax regime with 6 income slabs starting from 2.5 lakh. I propose to change the tax structure in this regime by reducing the number of slabs to 5 and increasing the tax exemption limit to 3 lakhs. The new tax rates are 0 to 3 lakh, nil. 3 to 6 lakhs, 5%. 6 to 9 lakhs, 10%. 9 to 12 lakh, 15%. 12 to 15 lakhs, 20%. And above 15 lakhs, 30%. This will provide major relief to all taxpayers in the new regime. My third proposal is for the salaried class. and the pensioners, including family pensioners, for whom I propose to extend the benefit of standard deduction to the new tax regime. Each salaried person with an income of 15.5 lakh rupees or more will thus stand to benefit by 52,500 rupees.
All right, well, a couple of key points that need to be looked at, and we've got some fantastic tax experts over here with us. So insurance payouts above 5 lakhs to be taxed, that's something that we picked up. How is that going to work?
So I think what they've done, at one end they have reduced the tax rate for the maximum tax rate from 43% to 39%. So I think they are also now closing a couple of avenues for the high net worth individuals where they have been investing. I think insurance products where you pay premium in excess of 5 lakhs per annum is typically put in by people above that limit.
Right.
So I think now what they're saying is that any such investment which you make after April 1, 2023, that will be, or any insurance policy you take after that point, it will be taxed at your normal tax rates. So right now you paid zero tax whenever the policy matured. Now it will be attracting depending on the slab, it could be as high as 39%.
Right.
So the attractiveness of this specific product will go down substantially, and I think that's where when we were discussing that some of the insurance companies would be facing the heat in the market.
So as the markets are seeing that fine print.
The markets have gone down a lot.
Also, of course, that point on capital gains tax on residential property. Now, that again is another avenue which above 10 crores, the cap is now 10 crores for capital gains tax on residential property. What will the impact be of that?
So what the law earlier said or currently says is that if you have sold any residential house property and if you make investment in any other new residential house property, then there are exemptions available under Section 54, and so there was no limit earlier in terms of the kind of capital asset you were purchasing or the capital gain that you were investing. Now that gets capped at 10 crore rupees. So someone who, say, as Vishal said, when you talk about HNIs where there is capital gain is substantially higher, you would see that getting capped at 10 crores now.
I think there's some difference here, Divya. I think so one is Section 54E, where if you sell a residential property, you can invest into another residential property. There's no change in that. There's another section which is 54F, which says that if you sell any asset other than a residential property and you buy a residential property, that is exempt.
Okay.
So if in the startup world, we have seen that a lot of founders, when they have exited their startups or they have divested, they have realized huge gains. So those gains have been invested in properties to shield the tax liability on the transaction. So earlier you could buy an asset of 50 crores or even more in Bombay or in some locations in Delhi, but now the limit has been put at 10 crores. So if you sell any shares, for example, and if you buy a property, up to 10 crores it is exempt, but if you buy a 50 crore worth of property, on 40 crores you will end up paying capital gains tax.
It's a cat and mouse game between the tax collector and
so they're covering both the sections 54, which is selling a residential house property and buying another one, and 54F, which is selling any capital asset and buying a residential property.
And we've seen the markets coming down from that initial euphoria of over 1,000 points. So why do you think that is, Mr. Sidhwa? Also this market-linked debentures, the tax now on market-linked debentures, what's the impact going to be of that? Is that a big change?
So yes, that's going to be a big change because earlier these debentures were treated as regular normal equity shares virtually. So essentially they were taxed at maybe 10% at the capital as a capital gains. Now the effect of this is they are peeling the onion on the debenture and they're saying this is not actually equity kind of a unit. It's actually a derivative. It includes a interest portion which is built into the debenture, and consequently it should be taxed at the correct rate. So they've actually unpeeled that transaction, and they've said that no, this is not a security, just a vanilla security. It's actually something more than that, and therefore they've now prescribed a separate way on which capital gains has to be calculated. And because it's going to be a different way, it can go up to a peak rate of 30%, whatever is the tax rate applicable.
Well, one of the things that we've been trying to do is just in terms of getting an idea of what the overall picture is. Number one, taxes. Everyone's talking about that. But also what's becoming more expensive for you to buy, what's becoming cheaper. Ankit has got details. of all of that. Ankit?
All right, thanks, Vishnu. In fact, on this budget, while the focus, of course, is on the markets, people, middle class specifically, only interested in what's happening as far as their tax slabs are concerned. So, as the finance minister said, the new tax regime, that will be now the default tax regime for people. They are, in fact, trying to popularize the new tax regime, which has been in existence for the last couple of years, but most people still on the old tax regime. So now it will become a default regime. That means that if you want to go for the old tax regime, you will have to tell your chartered accountant or your company that you want to opt for the old tax regime, because the new tax regime will now become the default tax regime. Now, individual tax rebate has been increased to 7 lakh rupees under the new tax regime. And apart from that, the tax rebate is up from 5 lakh rupees to 7 lakh rupees in the new tax regime to make it more popular as far as the taxpayers are concerned. Individual taxpayers are concerned, income tax payers are concerned. The tax slabs in the new regime have been cut from 6 to 5, as the finance minister was saying. Now, income above 9 lakh rupees and up to 12 lakh rupees will be taxed at 15% under the new tax regime. Now, the maximum deposit limit for senior citizens has been enhanced from 10 lakh to 30 lakh rupees. And the other measures that the government has announced in the budget, for the middle class, for various sections, for youth. In fact, it has been announced that the stipend support will be for about 47 lakh youths. Apart from that, the government has also said that the scope for DigiLocker services will be expanded. This is something that the government is, in fact, working towards to simplify not only the way we process our documents, we present our documents, the KYC norms will also be simplified, is what the government has, announced in the budget. And apart from that, cigarettes have become costlier. The duty has been raised by 16% as far as the cigarettes are concerned. So on a lot of things, people are in fact talking about how it is going to impact. But just to give our viewers a very quick example as far as the tax regime is concerned. Let's say you are, and this is what the finance minister in fact also announced, there'll be more money in your wallet under the new tax regime. If your income is 9 lakh rupees and it falls under a new tax regime in the 9 lakh rupees slab, you will be saving 15,000 rupees extra. And if your income is 15 lakh rupees, if that is the slab that you fall in, then you will be saving about 37,500 rupees extra. What are the things that are getting expensive and what are the things which are getting cheaper? So cheaper parts of mobile phones, parts of TV panels, machinery for lithium-ion batteries and raw material for EV industry. So electric cars and apart from that, mobile phones and TVs, the cost might be coming down. What is getting costlier? Cigarettes, imitation jewelry, silver, electric kitchen chimney, and imported bicycles and toys would also be now, in fact, getting costlier.
Ankit, thanks so much for that. And let's just go across to this. When you're looking at this tax relief, there's also another point coming in, Ms. Roy, on overseas remittances. That apparently now there's a tax collection even for overseas remittances. So the fine print, in a sense, coming out now, calculators out. What exactly does that mean for, say, international students or people taking a holiday abroad?
So actually, TCS was always applicable. It was there earlier as well. So for, especially if you have a child studying abroad, there was a 5% TCS on the payments that you make for fees, for instance, to a foreign university. That rate was actually lowered to 0.5 if you took a loan for the fees. But then also they had introduced TCS on foreign travel. So say, for instance, you converted your money into foreign currency, or you took your one of those preloaded cards, or you actually paid for a group tour. Again, there was a 5% TCS that was applicable. In this, the fine print, what we are saying is going up to 20%. So that seems to be quite a high amount given the expenses that you have. So they're actually making foreign travel a lot more expensive. Now, the thing is, obviously, this is a cash flow issue. You can always claim the TCS back when you file a tax return. But the idea is that they are trying to kind of, again, similar to the thing on the insurance policies and the 10 crore limit on housing, they are going after HNIs. So HNIs, especially who travel abroad or have these, more expensive lifestyles, they're trying to kind of get a pound of flesh from those transactions.
So, Mr. Malhotra, do you see this as a middle-class budget?
It is clearly a middle class budget because if you see all the positive changes are largely on salary taxation or individual taxation. I think if you look beyond that, for corporates, I think corporates not much has been done, and on individuals, I think while at one end, on the first glance, it appeared that they have given a benefit which nobody was expecting, that the maximum marginal rate will reduce to 39%, but I think they are taking away much more. So I think it benefits middle class, but I think not necessarily high net worth individuals.
And another big area has been the startup space. That there was a hope that there would be tax incentives for the startup. We heard the finance minister talk about how India now has many more unicorns than earlier. Do you think enough has been done in that space, Ms. Roy?
So I don't think there's any major announcement in that area. But what I would like to mention is that there is an announcement which has been made from a GST perspective, which is for smaller players who would supply goods earlier through an e-commerce operator. So through, say, an aggregator, you could supply. So earlier, all supplies needed to be done by a registered person. Okay. So now that compliance, so even unregistered dealers can supply within a particular state through an e-commerce operator. So it makes...
really expanding that whole space.
Correct.
I just had to go across back to the Confederation of Indian Industry, perhaps to look, as we talked about the budget for growth, we looked at whether it's a middle-class budget, Nidhi, but is this a budget for growth? Is this what industry wanted?
Right. Thanks very much for that, Sonia. And let me just introduce our panelists at this hour. Mr. Rajiv Memani, the chairman of the CII's National Committee on Taxation, is here. Just the person we want to talk to, actually, as we look at the tax labs. Mr. Feroz Kambata, chairman, the group chairman of Rana Private Limited, is with us. And of course, Mr. Chandrajit Banerjee of CII is back with us as well. Mr. Memani, just explain to us. I mean, we've been talking a lot about the new tax regime, the new tax slabs, etc. But we're also now, looking at some of the fine print, on taxation. Can you explain to us, what else is coming out in terms of how, this budget is going to impact our tax payments?
Yeah, no, I haven't, honestly, I haven't read the fine print as yet. But from what I understand, from what's been stated in the budget speech, I think there's a clear emphasis by the finance minister to move from the existing regime to the new regime, and a lot of incentives that are being provided are for that. So earlier, for example, the slab rates have been reduced up to 7,50,000. People will not be, income levels up to that will not be paying taxes. Earlier, standard deduction was not available to the new tax. Now, standard deduction up to 50,000 rupees will be available. Or the maximum marginal rate has been taxed. So basically, Nidhi, when the earlier things came, when the earlier new tax regime came, people were not shifting because it was not beneficial. Now, at least our view is that people will have to evaluate, but for generally people who are not paying HRA, who are not claiming HRA, up to 50 lakhs of income, I think a lot of them may shift to the new tax regime, which will give them some benefit. And also a lot of people who have much higher income levels, say income levels above 2 crores, 3 crores, I think a lot of them may also shift to the new tax regime. So I would say that probably is a positive. It's a simpler way of doing tax. It would have been good if the government would have also done something on the health and medical side, because that's something that expense seems to be increasing. So I would say that is one. The second is, which was mentioned in the budget speech also, that earlier if you had capital gains and if you invested that capital gains in buying a residential property, and that number could be, you could buy something for 30 crores, 40 crores, 50 crores and not pay capital gains to that extent. That number has now been capped at 10 crores. So a lot of the ultra luxurious homes and other things that were being sold, I think that will probably be capped now to 10 crores. Obviously, people who can do a transaction before 31st March will still get that benefit, but after that, that will be capped. And on the indirect taxes side, I think it's still consistent. On finished goods, raise the customs duty. On those things that are required for manufacturing of more value added, they've reduced the customs duty on that, encouraging the manufacturing of green and everything. So there's a lot in tax, both in direct tax and indirect tax. I think there's a lot of consistency in the policy. the absolute numbers that have been taken,
much of this was actually on the CII's wish list, wasn't it?
Yes,
to simplify this and to relook at these slabs. I'd like to welcome Mr. Sanjeev Puri, the chairman of ITC as well. Mr. Puri, in terms of the overall picture though and the big takeaways from this budget, is this the budget that will help India's growth?
Absolutely. I believe this budget is progressive, growth-oriented. It is also prudent, inclusive, and I think also reflects a consistency, and which is itself a very good news for business, because a consistent policy framework is very welcome. And it has touched all the critical aspects. The increase in public infrastructure not only spurs jobs and therefore consumption, but also is making the economy ultimately more competitive. I think the idea to promote tourism, an area where India has immense potential, and do it in a targeted fashion, taking 50 places and developing them, I think is a great idea. Agriculture has always been on focus. I think two new positive developments this time is, one is the cluster-based approach, because building on the FPO and agri-infrastructure fund system that had come up earlier, now to scale that up, the cluster-based approach is the right approach. And it's going to be done with one value chain. Based on the success, hopefully we can take it forward. I also, I think one positive development also on energy transition is the focus on nature-based solutions, much sharper focus this time on nature-based solutions, and also accelerating energy transition, because that in itself is, besides the commitment on net zero, it's also something that strengthens the competitiveness of industry, enhances the reliability of the economy. So I think all in all, it's a very, very well thought out, very progressive budget. And one more point I would add is this whole focus on local level development, empowering the local communities so that jobs can get created, entrepreneurship can be developed at grassroots level. I think that's also very welcome for inclusive development.
So you're saying this will set us on that trajectory to 6.57% growth despite the global economic headwinds, which are obvious?
It will certainly take us in that direction, absolutely. This is, of course, this particular year is a very challenging year, because the global economy, there are a lot of headwinds and a high degree of uncertainty, right? So this will be challenging, but ultimately is going to take us to that trajectory. This year could be, the economic survey has given between 6.1 and 6.8, so there is a bit of a range because of uncertainty. But beyond that, I think it should certainly propel us there. And what we are also hearing, the global situation is not as bad as it was anticipated to be.
The IMF revised its numbers as well.
So hopefully, sooner than later, we will get onto that trajectory. The only issue is the global headwinds. I think internally we are in good path. Right.
Mr. Khambata, how do you see it? I mean, this is of course the last big budget or the last full budget of the government before the next general election. So there were some concerns whether it would take a very populist turn. It hasn't quite done that, but it's I think pleased a lot of people as well, especially the middle classes. Would you say that that's an accurate assessment?
Yes, it is. And I think more importantly, I think we are now trying, when we are taking the presidency of the G20, we are trying to be a very responsible and accountable, what I call government. And we are trying to do what we have promised as our goals. For example, we have set some environmental goals for ourselves, and we are trying to ensure that those are met. We are ensuring natural farming as a rule, and we are ensuring that. We are bringing technology into agriculture. We are also ensuring that the youth form startups at the agri level by accelerated fund. Marine exports are being encouraged. So overall, if you see all the announcements which have been made for everybody, it looks that it is in a very calibrated manner. I would not say it is just populist by giving freebies, but everything is being done in such a manner that ultimately the overall whole idea of an Amrit Kal, what I call, can really come in a given time. When, we don't know, but it can definitely come. But it will also not come only by announcements, what you see. It will also come if industry participates in the government's various schemes. For example, natural farming. Just giving the farmer some money, do natural farming, what he will do? He will make rice into organic rice, what he will earn. But if we can convert the organic rice into a frozen biryani and probably sell it at 10x value, we will increase exports and we will get better value for the farmer also.